China's bold economic shift, a threat to the US dollar's reign. Imagine a world where the US dollar, long the king of global finance, starts to lose its crown. In 2023, China fired a shot across the bow of the international economic order, slashing its holdings of US Treasury bonds by more than $100 billion. This wasn't a one-off decision, but the beginning of a calculated strategy that stretched into 2024, shaking the foundations of a system that has favored the United States for decades. For years, the US dollar has been the world's reserve currency, the go-to for trade, investment, and financial stability. But China's move suggests that this era might be nearing its end, raising big questions about what comes next. So what exactly happened? China, a global economic titan, had long been a major buyer of US Treasury bonds, essentially lending money to the US government by purchasing its debt. These bonds were a symbol of trust in the dollar and America's economic might. But in 2023, Beijing began offloading them at a staggering pace, cutting its stash by over $100 billion. By 2024, this trend showed no signs of slowing. This wasn't just about cashing out. It was a deliberate signal to the world that China is rethinking its relationship with the US-led financial system. The message: the balance of power in the global economy is shifting, and China intends to lead the charge. Why does this matter? The US dollar's status as the world's reserve currency isn't just a title, it's a superpower. It means countries stockpile dollars, use them to buy oil, and settle international deals. This gives the US a unique edge. It can borrow cheaply, influence global markets, and even wield sanctions like an economic weapon. China's decision to dump treasury bonds challenges that dominance head-on. By reducing its reliance on US debt, China is saying it no longer sees the dollar as the unshakable pillar it once was. Instead, it's betting on a future where the dollar's grip weakens and new players, like China itself, rise to prominence. This isn't just a financial transaction, it's a geopolitical chess move. In 2023, tensions between the US and China were already high. Trade disputes, tech rivalries, and military posturing had set the stage. Then came this economic pivot. By scaling back its treasury holdings into 2024, China began distancing itself from a system that has long amplified US influence. It's a slow burn, not an overnight collapse, but the implications are seismic. If China keeps pushing this trend, it could inspire other nations to follow suit, chipping away at the dollar's throne and ushering in a new era of global finance. What's next? The US dollar won't vanish tomorrow, but China's actions in 2023 and 2024 are a warning shot. They hint at a world where economic power is more evenly spread, and the US might not call all the shots. As China flexes its muscles, the question looms: can the dollar hold its ground, or are we watching the dawn of a new financial order? Only time will tell, but one thing's clear. China's $100 billion move has set the stage for a historic showdown. China's de-dollarization play, rewriting the rules of global trade. Picture a global economy where the US dollar isn't the default currency everyone turns to. That's the future China is betting on, and it's taking bold steps to make it happen. For decades, the dollar has been the lifeblood of international trade, used to buy oil, settle debts, and anchor financial systems worldwide. But China is quietly pulling away from this dollar-driven world, weaving a new tapestry of trade and power. Through a mix of savvy moves like stockpiling gold, striking deals in local currencies, and pushing the Chinese yuan onto the global stage, China is leading a charge toward de-dollarization, and it's shaking things up. One of China's big plays is boosting its gold reserves. While the dollar's value can sway with markets and politics, gold is a timeless asset, a hedge against chaos. Over recent years, China has been amassing a hefty stockpile, signaling it's not just preparing for a rainy day, it's building a fortress. This isn't about hoarding shiny metal, it's a direct jab at the dollar's dominance. By leaning on gold, China is crafting a safety net that could prop up its economy if the dollar falters, all while positioning itself as a heavyweight in a shifting financial landscape. Then there's the trade game. China's not content to keep using dollars for every deal. Instead, it's teaming up with the BRICS nations, Brazil, Russia, India, China, and South Africa, to rewrite the rules. These countries are increasingly settling trades in their own currencies, bypassing the dollar entirely. Imagine Russia selling oil to India in rupees, or Brazil buying tech from China in reais. This isn't a small experiment, it's a growing trend, fueled by a shared desire to break free from the dollar's shadow. For China, it's a chance to flex its economic muscle and build a coalition that challenges the US-led order. At the heart of this shift is the Chinese yuan. Once a homebody currency, the yuan is stepping onto the global stage with swagger. China's been nudging its trade partners, especially in the BRICS bloc, to use it instead of the dollar. Through massive projects like the Belt and Road Initiative, China's weaving the yuan into deals across Asia, Africa, and beyond. It's not just convenience, it's strategy. By making the yuan a go-to currency, China's chipping away at the dollar's monopoly, aiming to create a world where its own money holds sway. This de-dollarization push isn't just economics, it's power. The dollar's reign has long given the US an edge, from cheap loans to sanctioned clout. China's moves threaten that, paving the way for a multipolar financial system. The BRICS bloc is on board and others might follow. If the yuan and local currencies keep gaining ground, the dollar could lose its throne, and China could emerge as a new kingmaker in global trade. This isn't a quick flip. It's a slow burn with stakes that couldn't be higher. The dollar under siege. How China's moves could unravel US financial power. For decades, the US dollar has been the world's financial rock star, trusted, coveted, and untouchable. It's the currency nations hoard, the one they use to buy oil and pay debts. But a storm is brewing, and it's coming from China. As Beijing pulls away from the dollar-centric system, the ripple effects could hit the US hard. Picture a future where the dollar's value dips, borrowing gets pricier for Uncle Sam, inflation creeps up, and America's global financial clout starts to fade. That's the threat looming as demand for the greenback weakens, and it's a wake-up call for a nation used to calling the shots. What's at stake? The dollar's status as the world's reserve currency isn't just prestige, it's a golden ticket. It lets the US borrow money at rock-bottom rates because everyone wants dollars. But if China's push to sideline the dollar gains traction, that demand could dry up. A shrinking appetite for dollars means its value might slide, and not just a little. A weaker dollar isn't just a number on a screen. It's a domino that could knock over everything from grocery prices to gas costs. For everyday Americans, that spells inflation, a sneaky thief that erodes buying power and heats up the economy in all the wrong ways. Then there's the borrowing problem. The US government loves issuing treasury bonds, essentially IOUs that fund everything from roads to rockets. With the dollar as king, investors snap them up, keeping interest rates low. But if faith in the dollar wanes, those bonds lose their shine. Buyers might demand higher returns to take the risk, jacking up borrowing costs for Washington. That's a big deal when your national debt is already a towering pile. Higher costs mean less cash for schools or defense, or more debt to pile on, which only makes the mess stickier. The real kicker, though, is influence. The dollar's dominance isn't just about money, it's power. It lets the US throw its weight around, using sanctions to punish rivals or sway global markets. If the dollar's grip slips, so does that leverage. Imagine a world where countries don't need dollars as much, where they trade in yuan or euros instead. The US could find itself sidelined, its financial megaphone suddenly muted. That's not just a hit to the economy. It's a dent in America's ability to shape the world, from trade deals to diplomacy. This isn't a done deal yet. The dollar's got deep roots and it won't topple overnight. But China's moves are piling on pressure. As demand fades, the US faces a world beyond the dollar, how global trade is tilting away from the US. The US dollar has long been the heartbeat of global trade, a universal key that unlocks deals from oil rigs to shipping ports. But the ground is shifting. Countries around the world, even some of America's closest friends, are peeking at the exits, exploring ways to ditch the dollar. This isn't just a whisper of change. It's part of a swelling de-dollarization wave that could redraw the map of international commerce. Imagine a future where commodities like oil or gold aren't priced in dollars, but in currencies like China's yuan. That's the seismic shift brewing, and it's rattling the foundations of a US-led economic order. This isn't a solo act by some rogue nations, it's a growing chorus. For years, the dollar's dominance made it the go-to for everything. A barrel of crude, a ton of wheat, a cargo ship's freight. But now nations are questioning that reflex. Some of the US-owned allies think Europe or parts of Asia are dipping toes into alternatives, testing trades in their own currencies or eyeing the yuan as a contender. It's not betrayal, it's pragmatism. As China flexes its economic might, these countries see a chance to hedge their bets, loosening the dollar's chokehold and opening doors to a more diverse financial playbook. What does this mean for trade? Picture oil deals inked in yuan or gold priced in euros. It's not science fiction, it's starting to happen. The BRICS nations, Brazil, Russia, India, China, South Africa, are already swapping dollars for local currencies in their deals, and others are watching closely. If this catches on, the dollar could lose its starring role in the markets that keep the world spinning. Commodities, the lifeblood of global economies, might trade in a rainbow of currencies, with the yuan leading the pack. That's not just a tweak, it's a revolution, one that could leave the US scrambling to adapt. This shift isn't just numbers, it's power. The dollar's reign has given the US a megaphone, amplifying its voice in trade talks and sanctions. But as countries pivot away, that megaphone might shrink to a whisper. Allies exploring yuan-based deals or regional currencies aren't just diversifying, they're signaling a world where America's financial sway isn't guaranteed. China's pushing hard, dangling the yuan as a shiny alternative, and it's working. If this de-dollarization trend sticks, international trade could look like a patchwork quilt, vibrant, varied, and far less greenback-centric. The road ahead is uncharted. This global rethink won't flip overnight, but the momentum's real. From allies to adversaries, nations are dreaming of a trade system less tethered to the US dollar. If commodities and contracts keep drifting toward currencies like the yuan, the economic landscape could transform. Less predictable, more plural, and a lot less American. The dollar's not down yet, but the world's starting to imagine life without its shadow. China's master plan, cutting the US loose and redefining global power. China's playing the long game, and it's a doozy. While the US has leaned on its dollar-driven dominance to steer the world economy, Beijing's been quietly crafting a strategy to flip the script. Step 1. Loosen the financial cords tying it to America. Step 2. Bulk up its gold stash like a fortress against chaos. This isn't just about money, it's about outmaneuvering the US, shielding itself from global storms and blunting Washington's favorite weapon, sanctions. China's not reacting to the moment. It's building a future where it calls more of the shots. First, the breakup with Uncle Sam. For years, China was a big buyer of US Treasury bonds, tying its wealth to America's financial health. Now it's stepping back, slashing those holdings to distance itself from the dollar's orbit. This isn't a tantrum, it's a calculated drift. By cutting these ties, China's betting on a world less hooked on US cash, freeing itself from a system that's long favored American interests. It's a slow unwind, but the goal is clear: reduce reliance on a rival and carve out space for its own rise. Then there's the gold rush. China's been piling up gold bars like a dragon hoarding treasure. Why? Gold's a rock-solid backup when markets wobble or currencies falter. With global instability, think trade wars, pandemics, or geopolitical spats, China's stacking the deck to weather any storm. This isn't just a safety net, it's a power play. A hefty gold reserve challenges the dollar's status as the ultimate safe haven, whispering to the world that China's got a plan B, and it's shiny, tangible, and independent of U.S. control. The real kicker: sanctions. The U.S. has long used the dollar's clout to squeeze foes, freezing assets or cutting off trade with a flick of the wrist. China's had enough. By dialing down its dollar dependence and beefing up gold, it's building a shield. Less tied to the U.S. system, China gets harder to punish. If it can trade in yuan or lean on its reserves, American sanctions lose their sting. This isn't just defense, it's offense, weakening a tool Washington's wielded for decades to keep rivals in check. This is China's grand vision unfolding. It's not about a quick win, it's a marathon to reshape the global pecking order. By untangling from the U.S., hoarding gold and dodging sanctions, China's hedging against chaos while chipping at America's economic throne. The dollar's still king, but Beijing's laying tracks for a world where it doesn't need to bow. If this pans out, the U.S. might face a rival not just in trade, but in raw financial might. China's betting big, and the stakes are global. Markets on edge. China's moves spark chaos and a dollar rethink. The financial world's buzzing, and it's not good vibes. China's been stirring the pot, and global markets are feeling the heat. As Beijing pulls strings to distance itself from the U.S. dollar, waves of instability are crashing through trading floors. Investors who once saw dollar-based assets as a sure bet are now scratching their heads, rethinking their playbooks. Meanwhile, central banks are shaking up their vaults, piling on gold and other currencies to dodge a dollar overdose. This isn't just noise, it's a sign the old rules might be crumbling. Picture the scene: stock tickers flashing red, traders glued to screens, all because China's tweaking the game. Its push to ditch dollar reliance, slashing treasury bonds and flexing its economic muscle, has sent shockwaves. Markets hate surprises, and this is a big one. The dollar's been the rock everyone leaned on, backing everything from U.S. bonds to international deals. But with China stepping back, confidence is wobbling. Volatility's spiking as the greenback's once ironclad value gets questioned, leaving Wall Street and beyond on shaky ground. Investors are in a bind. For years, they've parked cash in dollar-denominated stuff, think treasury bonds or corporate debt, betting on stability. Now they're squinting at the fine print. If China's moves signal a dollar downturn, those safe havens might not be so safe. Portfolios are getting a makeover as folks shift gears, eyeing alternatives like gold or even rival currencies. It's not panic yet, but it's close. Reassessing billions in assets isn't a casual Friday task. The trust in the dollar's staying power is fraying, and that's a domino nobody saw tipping so soon. Central banks aren't sitting still either. These guardians of national wealth are diversifying like never before. Gold, making a comeback, piles of it, because it's a lifeline when currencies wobble. Countries aren't just hoarding shiny bars, they're mixing in euros, yuan, anything to cut their dollar habit. It's a quiet rebellion against a system that's ruled since World War II. Why? China's showing the dollar's not invincible, and nobody wants to be caught flat-footed if it stumbles. This isn't a trend, it's a survival move. The instability's real and it's spreading. China's actions have lit a fuse and markets are jittery. Investors rethinking dollar bets and banks stacking gold signal a world bracing for change. The dollar's still in the ring, but it's taking hits. If this keeps up, we might see a financial shakeup where trust and treasure spread thinner across the board. For now, it's a wild ride. China's pulling levers and the globe's holding its breath. America's dollar defense, a risky battle against China's rise. The U.S. dollar's throne is rocking and Washington's feeling the heat. China's bold moves to sideline the greenback are threatening America's economic muscle, a grip that's shaped the world for decades. If the dollar's status fades, the U.S. risks losing its financial swagger, forcing a scramble to hold on. The playbook: maybe jack up interest rates, swing sanctions like a hammer, or sweet-talk allies into sticking around. Problem is, every counterpunch could backfire, rattling the U.S. economy and fraying ties with the world. It's a tightrope walk with no safety net. This isn't just about pride, it's survival. The dollar's perch as the global reserve lets the U.S. borrow on the cheap and steer international rules. China's push threatens that, and the U.S. can't shrug it off. Raising interest rates could be the first jab, make dollar investments tempting, keep the cash flowing in. But that's a buzzsaw for Main Street. Higher rates mean pricier loans, slower growth, and maybe a ticked-off public if inflation joins the party. It's a fix for the dollar that could dent the home front, a trade-off nobody's eager to cheer. Sanctions are the old reliable, punish nations flirting with China's yuan or skipping dollars. The U.S. has flexed this before, locking foes out of dollar networks. But China's building a bypass, and allies might balk at being dragged into the fray. Push too hard, and friends like Germany or South Korea could drift, eyeing their own paths. It's a power play that might leave the U.S. looking less like a leader and more like a cornered champ, swinging at shadows while the crowd thins. Then there's the charm offensive. Diplomacy could rally partners, cut deals, lean on history, keep the dollar in wallets. It's less bruising than sanctions or rate hikes, but it's a slow burn. China's flashing alternatives and trusts a tough sell when the yuan's gaining fans. Global ties could strain if the U.S. leans too heavy, begging for loyalty while rivals offer freedom from dollar strings. The economy might dodge a direct hit, but the diplomatic dance could still trip over bruised egos. The U.S. is at a crossroads. China's challenging the dollar's reign, and every response, rates, sanctions, handshakes, carries baggage. Economic strain's a real ghost, so's a world less keen on American sway. The dollar's not down, but it's dodging punches. How the U.S. fights back could shape whether it keeps its crown or shares the ring. For now, it's a tense standoff, and the globe's got front-row seats. A new money game. Could China's yuan steal the dollar's spotlight? The world's financial stage is set for a shake-up, and China's holding the script. For ages, the U.S. dollar has starred as the lead, directing global trade and power from center stage. But China's got a bold vision. A rebalanced economy where its yuan and other currencies share the spotlight, nudging the dollar off its pedestal. If this plan pans out, the greenback's long reign could fade, giving way to a fresh cast of financial players. This isn't just a currency swap. It's a rewrite of who holds the reins in the global money game. Imagine a marketplace where the yuan calls the shots. China's been pushing hard, nudging trade partners to ditch dollars for its own cash. Through deals with countries like Russia or Brazil and mega projects spanning continents, the yuan's stepping up. It's not alone. Other currencies could tag along, creating a chorus that drowns out the dollar's solo act. This isn't about erasing the dollar, it's about dimming its shine. A world where multiple monies matter could spread the wealth and the power, thinner than America's used to. The dollar's supremacy isn't just convenience, it's leverage. It's let the U.S. borrow cheap boss markets and flex muscle worldwide. But if China's strategy clicks, that edge dulls. Picture oil priced in yuan or gold traded in rupees. The dollar's throne could wobble as demand dips, handing the baton to a new financial order. The yuan, once a bit player, might strut as a star, backed by China's economic heft. Other nations, tired of U.S. dominance, might cheer this shift, eager for a slice of the pie. This isn't a fairy tale, it's a slow build. China's not toppling the dollar overnight, but it's laying bricks for a different future. A rebalanced economy means less U.S. sway, more room for rising powers. The yuan's rise could redefine who wins and loses in global finance, tilting scales toward Beijing and beyond. It's a power pivot, less about one king falling and more about a council of currencies sharing the crown. The U.S. won't vanish, but its spotlight might shrink. If this new order sticks, the dynamics flip. Trade, debt, even geopolitics could dance to a fresh tune, with the yuan humming loud. The dollar's long-standing supremacy, born after World War II, might become a memory, replaced by a multipolar money world. China's betting on it, and the globe's watching. Will this rebalance spark chaos or a fairer game? Either way, the financial curtain's rising on a scene where the U.S. isn't the only director anymore.